Hello, my name is Greg Hebner. I'm here to present a investment opportunity for storage and self-storage, as well as a small retail operation in Kansas City, Kansas. So first off, kind of go through the two aspects, the two market dynamics of self-storage and retail. We'll get into the property as well as the investment analysis and what the investment opportunity is available. So real quick here, since we got a couple different revenue triggers for this property, just kind of wanted to go through what the property actually is and then why we're going into the two different market dynamics for retail and self-storage. So there are five retail storefronts on the bottom floor on the main, on the ground floor. A lot of these have been there for a long time. The laundromat has been there for basically forever. There's been a general store there for, as best somebody could say, would be 25 years. The Liberty Tax Branch Office, the owner of this, also operates four other tax offices in the similar vicinity or so. The consignment store started this year before the pandemic and made it through the pandemic, so vitally important for the clientele in this market. On the self-storage side, there's various sizes, basically however they could build them inside of the structure they did. The rents are extremely low, which is what we'll cover off here. That's part of the opportunity. There's 114 available units. 10 of those comprise about 40% of the overall rental space right now, and they need to be either charge more rent per square footage or be broken up into smaller units. And there's really good traffic. Number one, it's in a great location, pretty central to Kansas City, Kansas, and it gets a lot of attention because of the signage on the property related to U-Haul, which makes people think of storage and moving and all of those aspects. So real quick, for the self-storage marketplace, we've got the overall Kansas City demographics here for the population size, household income, et cetera, et cetera. For the overall market, this is the Kansas City, Kansas, and Missouri metro market. There's about 320 storage facilities comprising a little over 14 million square feet. And there's about 25 or so in development here currently. So there's a little bit of development going on, not a whole lot in the overall market. Actually, in the 5-mile radius of the market, so we're actually just right here where this white dot is here. Actually, the red dot is Interstate Storage just off of State Avenue, which is the main thoroughfare east-west going through Kansas City, Kansas. For those of you that are familiar, the Legends and the Speedway Shopping Center is just over here. I've actually got another property I'm looking at just on the other side of that, so I'm learning this market extremely well right now. And there's really nothing else in this marketplace at all. This is all residential housing up in here. Obviously, there's commercial along State Avenue here, and then we've got the border and the Missouri side over here. And so downtown is here, so that is basically a barrier. If you're going to store your stuff, are you going to drive through downtown to go to a facility? No, probably not. But there's also only one new development going on in this radius here. We serve about 144,000 people, and give or take, honestly, a majority of that's going to be on the Kansas side, just because this is downtown. There's just not a lot of living, rentable housing available in that location right there. So these are all good metrics here as well for income to justify self-storage. Here's a couple pictures. These are just built-out units. It's a concrete structure. You can see the concrete piers and framing, floor supports and everything like that. This is a concrete structure. It has not moved in about 90 years. It is a fantastic building. The rental price per square foot, which is the main metric for self-storage. Obviously, during the pandemic, people needed to, or the early stages of the pandemic. Sorry, that's not true. This is just about a year ago or so. We saw a spike in square footage. I'm not really sure what was related to that or anything, but you can obviously see here, averaging right around that 120 mark or so per square foot. That goes across all unit sizes. Currently, we're at 67 cents a square foot. That's what the current owner is operating the facility at. My pro forma only goes to about $1.04 per square foot over a 24-month period, over the first 24 months. So we're still going to be below the market. And again, given the very, very, very low saturation of self-storage in this marketplace, I don't see that there's no reason why we can't fill this up very, very quickly. These are just, you can dig into these more a little bit here, but you can just kind of see the monthly trends of the pricing of the available units based on the sizing up there. So NCC is non-climate controlled. This is not a climate controlled facility. It's whatever the temperature is inside is what the temperature is going to be inside the building. I wanted to try to throw a comparison out here so you can see the trending over the past year or so on the rental prices for these units. And you have averages down here at the bottom. These are the current rates charged for interstate storage. So let's just pick the 10 by 10, for example. They're charging $67. Just looking through these numbers, about 130, 135. So yeah, 134 is a good metric there. The rental price is about $1.34 per square feet, and we're at 67 cents. So literally about half what we could be charging. And I'm proposing to go to around $100 a square foot. So we're still going to be super competitive in the marketplace. Next, we'll move into retail. This is a tight retail market, honestly. There's 3 properties listed for rent in about a 2-mile radius here on LoopNet. There are 3 more listed down here on State Avenue, and then on Crexy there are. So here's a couple of them. 3 more spaces down in here. Now we're getting into the legends here and everything like that, where it is more commercial and just more available. Here is what's considered downtown Kansas City, so there's going to be a concentration of more available. But there's very few listed for less than $12 a square foot annually. There's one for $6 here. Obviously, I think there was one for $5 over here in the Docklands and the purely industrial area. But you see 11, you see 14, you see 9, 20 down here. Our average rental price is about $8.52 a square foot right now. My pro forma only has it increasing to about $10. So we don't expect the tenants to leave or anything like that, but we're also going to charge back taxes and insurance prorations, which is a small amount, but it adds up to about $8,000 annually, which just helps to offset. Majority of the square footage available is actually self-storage, so it's not going to fully equate to our taxes and insurance costs that we have, but offsetting some of that definitely will help. So in summary here, we expect to generate a little bit more revenue from increased rents and from charging back from a triple net perspective, taxes and insurance, and maybe some common area maintenance. Honestly, the Liberty tax person pays to have the snow removed because in February, March, he wants the snow removed so his customers can come visit him. So, there are people that take some responsibility and take some ownership on top of themselves to get things done. So obviously he's doing enough business there to handle that, which is a fantastic endeavor. we can obviously increase rents on the existing self-storage, and we can break up some of these units or just charge much closer to market rents, closer to $1 per square foot, even for the larger units. Where the majority of our revenue comes in into play, and I'll send along a profit and loss report, a pro forma for 5 years, is building out the additional rental space. So here is about 14,000 square feet, and we can add about another 10,000 or so square feet to there, which generates another $11,000 in monthly income. And really what that equates to here, so that storage is about 174 percentage increase in rentable self-storage. The unit count increases substantially, which drives our net operating income to increase substantially. Based on the current cap rate of 6.44, or the purchase price, our pro forma at about 2 months' time, the building will be operating at about a 20% cap rate, which could be equivalent to about a 20% return if we had no debt on the property, which is pretty substantial in this market, in this climate where everything is so tight. The value, if we took the 6.44 cap rate value and applied it to this operating net operating income, would generate almost a $4.5 million value on the property, which is over a 300% increase, which again is just substantial in the marketplace right now, where it's very, very difficult to find that type of return overall. Here's the total investment analysis. The P&L document is just too large to put in here, so I'll send that along separately. I need just under 400,000 or so to close. I am contributing about 236,000 to this endeavor as part of a 1031 exchange I have going on. So I am investing just alongside you as well. And you can see the returns here. So you can see that, you know, the cash on cash returns are quite substantial. The reason why they dip down is because we refinanced out. And so obviously our cash flow will be reduced because we return a substantial amount of capital to the investors, to everybody invested here. So at about 24 months or so, when we have a good operating timeline, we'll return the initial capital and invested, as well as some additional tax-free refinance proceeds on the property, and still be able to enjoy cash flow from the property through the duration. I just model this over a 5-year period to give a 5-year sale, just to have a little bit of comparison. But about a 70% IRR is what we're projecting here. I mean, this is just outstanding in the marketplace. You really can't find this type of value add property really anywhere in the market right now. What I really need is two different two $85,000 investments. Will round out the capital that is required for this. If you invested $85,000, you'd have a 15% ownership in the entire property. You'd be listed on the deed alongside myself, and those would be your returns. So the metrics and the percentages would be all the same, but you can see how your cash flow would actually be distributed. That's the high-level overview of this. I didn't want to keep this pretty brief here. Again, I'll send along a PDF of this, as well as the investment, as well as the profit and loss for the first 5 years that you can dig through. But if you have any questions, here's my contact information. I'm with Ethos Capital Ventures. Again, my name is Greg Hebner, and I look forward to talking with you further.